Hi traders, welcome to another episode on the trades we missed last week. So starting from September 7th, 2025, which happened to be on Monday. This is a fair value gap, and you can see coupled with a bullish order block right here. So at this spot, we call this our demand zone. This is a demand area. So we anticipated that price would tap into this fair value gap order block and give us a break of market structure, and that's what it did here. Now we have a tap into that area here, and you can see how the market rallied to the upside all the way to this spot, giving us a break of market structure, breaking the previous high. Now I would also have it in mind that when the price comes back to this area, it taps into a fair value gap for entry. So this is the fair value gap that was cited, and as price comes back to this area and taps into it, you can see how it just went back up. Now this is a full setup here because price had once tapped into a demand area, a fair value gap. So now this is how we put our entry for our first long position here. Our stop loss would be right below that previous low that tapped into that first fair value gap, and this area would be our entry. This fair value gap at the start of this newly formed fair value gap would be our entry. So this whole space would be our stop loss, our risk. So we would calculate what we are risking through these numbers here, these price numbers. So next is our take profit. This is our TP. Our TP would be around 3.34 risk to reward ratio. As you can see, this is our TP here, and you can see how price rallied up to reach this spot here. You can see up to this fair value gap here, giving us a risk to reward of 4.12, as you can see here. 4.12 risk to reward ratio, because once price taps into this fair value gap, it can retrace and go back down. So it's much more safer to stop here. So that was our first trade. Now this is our second trade. As you can see how price tapped into this fair value gap here. This is it. Let me put this onto the side. This is the fair value gap here. You see this fair value gap. By your left you can't see any candle, and by your right you can't see any candle also here. So this is a fair value gap, and there was no wick that covered this spot. So as price comes to tap into this fair value gap here, would see and wait for, would have to wait for a break of market structure. So this is our break of market structure here. You can see this was our first trade. This was our second trade here, and you can see price broke this previous high, giving us a break of market structure. And also prior to that break of market structure, we have a fair value gap here. This fair value gap and this order block is where we put our entry. So this is our order block here, and you see how price comes back to tap into it and bounces back up, giving us our trade entry. So this is how we put our bullish trade long position here for a higher risk to reward ratio. We are not alighting the whole fair value gap for our entry. So this right here would be our stop loss right below this low that taps into this first fair value gap. That would be our stop loss. This is our entry at this order block coupled with this fair value gap here, and we can use this spot as our take profits, giving us a 2.42 risk to reward ratio because of this previous high. This is enough for your profits, but for a higher risk to reward ratio, for a higher profit, we can use this previous high here. You can see it. You can use this previous high here, giving us a 5.83 risk to reward ratio, or use this one that we use for our first trade, and this is 7.83 risk to reward ratio, and also a bullish trade at that. So next is our trade number 3. So I didn't remember to number them, but this is our trade number 3, by the way. So we have a fair value gap here. As you can see, this fair value gap is coupled with our order block right here. This is a fair value gap. So this is a strong demand area using this order block. Now the order block has been highlighted here, so we anticipate that price will tap into it, and price did. So price taps into it. As price comes back up, it breaks this previous high here, as you can see. And the next thing is to anticipate that it would hit our entry, which is our fair value gap here, and that was so. So this is our long position, like so. Tap into our fair value gap, and right here is our stop loss at this spot. Our stop loss is at that low that tapped into that first fair value gap, and that was our trade number 3 right here. So take profits would be at our previous high here. So this would be our take profit, and you can see how price hits take profit, giving us a 3.19 risk to reward ratio, just like so. And moving on to our trade number 4, you can see it tap into this first fair value gap here, like so. Tap into it here. You can see it. This is very clear. Price fill this fair value gap and bounces back up. After it goes back up, what we need to look for is a fair value gap. So is there a fair value gap here? Yes, there is a fair value gap here. This is it, and we'll anticipate that price will tap into that fair value gap to give us our entry. So this is it. This is where our entry would be, and our long position, like so, at this spot. See how price taps into that fair value gap. This is our stop loss right here at this low that tapped into that first fair value gap. So this is a tap, you can see. This is the tap here. Let me use this. This is the tap here. So that's why you can see that price had tapped our entry, our fair value gap. The next thing is, and bear in mind, we have our break of market structure already here. Next thing is our take profits. Now our TP would be our previous high, like so. This would be our previous high. And you can also use this for your previous high. So you can see this optimum premium area. So this would be our take profits, giving us a 5.13 risk to reward ratio. As you can see, this is our take profit here for that trade. And moving on, that was our trade number 4. Next one is our trade number 5, just around the corner, and let's search for our fair value gap. As price was moving upwards, we have a fair value gap here. Price taps into this fair value gap area here, as you can see. So we have a fair value gap here. Price comes to fill that fair value gap. That's why we highlight it here, and bounces off from it. After price bounces from that fair value gap, it created what? A break of market structure here. As you can see we have a break of market structure. That is confirmed. The next thing, do we have our fair value gap? Yes, we do have a fair value gap here, and for a higher risk to reward ratio, we can use the order block. So as price taps into this order block, it gives us a smaller risk and a higher reward. So this is how we put our long position, just at this order block here, and our stop loss is right around this area, this previous low. That is our stop loss, and this happened to be our trade number 5. This is a bullish trade, and this is where we put our take profits, giving us a 2.98 risk to reward ratio. So that was our trade number 5. The next trade is our trade number 6, and it's just here. We have a trade right here. We have a tap into this demand area. You can see a very strong demand area coupled with that fair value gap. So that fair value gap is where this price is trying to bounce away from, and as price tapped into this area multiple times, it failed to cross below it, and the next thing we can see is a bounce from that area with a fair value gap here. You can see this fair value gap here and a break of market structure just here. You can call this a break of market structure because this was a previous high here. Also this too, you can call that a previous high, giving us all our information we need before we enter the trade, and just anticipate that price would bounce from this fair value gap, and price did justice to that. So we have our order block, and we are patiently waiting that price would tap into these spots. So this is how we put our long position at this order block here. We have our fair value gap, so no need to highlight the whole fair value gap for our risk. You can just use the order block, and our take profit would be at the previous high or at the extreme one here. You can see how price rallied to the upside and give us a 3.86 risk to reward ratio for our trade number 6, I guess. Yeah, this is our trade number 6. The next trade should be our trade number 7, and where do we have it? Okay, it's happened to be a bearish trade. Now this is our trade number 7. You can see how the price taps into a fair value gap first. This is our fair value gap, so you can see. Let me put this aside for you to see it clearly. This is our fair value gap here, and price rallied to the upside to tap into this fair value gap, bounces away from it, created a BOS, which is our break of structure here. Price breaks below that low and created for us a fair value gap here, and you can see this fair value gap. We can use this as our entry. So as we have a fair value gap coupled with a strong order block here, we can use that order block. So now this is how we put our short position at this order block. So we just anticipate that price will rally to the downside. So this is how it is. We have our stop loss at this previous high that tapped into that previous fair value gap, and our entries are this newly formed fair value gap here. The next thing is our take profit. You can actually take profit here. This previous low can be our take profit, giving us a 1.98 risk to reward ratio. Or you can as well use this low right here. This can also be your low here, and the price can give us a 2.76 risk to reward ratio. And you can also see that price actually rallied all the way after coming back to tap into it. Price rallied all the way to this spot here, but we have our low here that we can use. The next thing is our next trade. So our next trade happened to be our trade number 8. So our trade number 8 is coming from a bullish fair value gap. Now we have a fair value gap here, as you can see. We have a fair value gap here, and price tapped into this fair value gap, bounces off from it, and the next thing is we have a break of market structure here. You can see how price breaks structure here. First of all, the price actually tapped from this spot. If you look at this fair value gap, you can see price already tapped into that fair value gap here, already tapped into it. So this can also be your entry. Let's just see how it goes. Long position here, and our stop loss should be below this low, and we have our entry here. Price tapped already. Our take profit should be at your previous high or your previous fair value gap here. So we have a fair value gap at this spot here. Can you see the fair value gap here? So this should be our reason to take profit here, and this is giving us a 3.48 risk to reward ratio. As you can see, price already tapped into it, and also price tapped again to that same area. So this is giving us a second trade on that same setup. See, price tapped into it, and this is same stop loss, same entry, and our take profit should be at that previous high. You can see this previous high was hit. This is giving us a 4.24 risk to reward ratio, and this should be our trade number 8. This is a trade number 8 here. This should be our trade number 9 here, but these two are from the same setup. So next is a bearish trade. Now after price taps into this fair value gap, you can see the push to the downside from this spot. So the next thing, you can see how price created. Let's push this to the left. Let's push this to the left. You can see how price created this fair value gap here, and also a break of market structure here. You see, this is very clear. We have a break of market structure here. Price value to the downside created for us a newly formed fair value gap, and this is what we would use for our trade number 10, bearish entry. At this spot here is where we'll put our entry, and here is where we'll put our stop loss. Our take profit should be at the previous low or the previous fair value gap here. So either ways, we have a good trade. Now looking at this previous low, this is giving us a risk to reward of 4.22 risk to reward ratio. Now we have our number 10. We have our trade number 10 right there. Let me write it here. So that was our trade number 10. So the next is our trade number 11. Now we also have a bearish trade here. Looking at this sweet trade, we have a tap into this fair value gap, yes, which is evidently seen here. This is a fair value gap, and price tapped into it and goes back down, creating a break of market structure here. The next thing is a fair value gap after that. Now we have a fair value gap here. This is our fair value gap here. This is our fair value gap here. So we can use the whole area for our stop loss. So we have a fair value gap, we have an order block here. So what we do is using this order block as our risk management. So we have our trade short position just like so. Put it at this spot here, and you put your stop loss right above that high that created for us that whole newly formed fair value gap here. So the next one is our TP. So our TP should be at our previous low here. Since we have a bearish trade, our TP should be here. This is giving us a risk to reward of 4.74. So that was our trade number 11. You can see our price rallied to the downside. Let me put it in writing. Trade number 11, 4.74 risk to reward ratio. Now onto the next trade we have is our trade number 12. Now we have a tap into this fair value gap here. You can see this fair value gap. See this fair value gap here. We highlight it here. Price taps into that fair value gap and rally to the downside. You can also see that there's a fair value gap that was newly formed here. This is giving a reason for us to enter, and this whole scenario is giving a bearish move of price. So we have a tap into that fair value gap and also a newly formed fair value gap, and this fair value gap has a break of market structure here. So as price breaks that structure, we just need to look for a fair value gap for us to trade with. Now we have one here. So this is how we just enter the trade. Our short position just like so at this fair value gap here. So as price comes to fill up that fair value gap, bam, we have our entry. So just like so, and we use this previous low as our take profits here. This is giving us 5.71 risk to reward ratio. So that was it, and you can see our price taps our TP. And the next one is our trade number. This is our trade number 12. The next one is our trade number 13. You can see that price taps into this fair value gap here. This is a fair value gap. Let's highlight it like so. Price comes to tap into this fair value gap and rally to the downside, giving us a break of structure here. And also prior to that, a fair value gap here. This fair value gap is what will be anticipating that price would come back to, and price just did so. You see how the market just respects that setup. Price comes back to tap into this fair value gap and was quick to give us our entry. So this is our short position here. Our stop loss will be above that high that tap into that first fair value gap. Our entry just at this fair value gap, and our take profits should be at this previous low here. This should be our take profits. This is giving us a 4.46 risk to reward ratio. So that was our trade number 13, if I'm not mistaken. So that's our trade number 13. On to the next one. We have more trades to go. So this next one happened to be a bullish trade. Now we can see, first things first, we tap into this favorable gap here. We have that tap into that favorable gap. So we align the whole candle, and after tap into that favorable gap, you can see a break of market structure here and a favorable gap here. So that's what we highlighted here. We have a break of market structure and a favorable gap. So we use this order block as our entry. Long position here. Our shorts, our stop loss should be here at this previous low that tap into that favorable gap, that first favorable gap. So the next thing is our take profit. Now our take profit should be at this previous high here. This is giving us a 2.07 risk to reward ratio. You can see how price rallied all the way up to this spot. So we can as well use this high here as our take profit. And this high is giving us a 2.57 risk to reward ratio. That's fair enough. Next thing is our trade number 15. So this was our trade number 14 here. So we have our trade number 15 here. So as you can see, price tapped into this demand area, which is a fair value gap here, and you can see it here. The next thing is the price actually created a fair value gap here and a break of market structure. This is our break of market structure here. Now price comes back to tap into that area, that's fair value gap. You can see how it tapped into this fair value gap here, this whole fair value gap. You can see it here. So we can use this breaker here as our entry. So a long position like so, using our breaker here, this can serve as our inducements that price actually had to sweep. So this here is our stop loss at this previous low here. Should be our stop loss because this is what created our fair value gap, and our take profit should be at our previous high. You can use this as our previous high here. This should be 2.44 risk to reward ratio. So this was actually fair enough, giving us a bullish trade for our trade number 15. Now on to the next one, which is our trade number 16 here. We have a tap into a fair value gap as usual. You can see this fair value gap, tap into this fair value gap, this whole fair value gap. Then you can see how price tapped into it and created for us a break of market structure, and prior to that a fair value gap here. So this whole fair value gap candle is what we are using as our entry and our risk. So a short position here, tap into this fair value gap. For higher risk to reward ratio, we can just use the order block here. This last bullish candle is our order block. So we have a tap into it, and this one here is our stop loss. this previous high here is our stop loss, and our take profits should actually be this previous low here. We can use this previous one as our take profit, or this one here. So this is our take profit here, giving us a 3.27 risk to reward ratio for our trade number 16. So that was a bearish trade. So moving on, we have our trade number 17 here. You can see how I've highlighted this one. This is a demand area here, coupled with a fair value gap here. As you can see, there's a fair value gap here. So I highlighted the whole demand area and waited for price to tap into it. As you can see, we have price tapping into it and created for us a break of market structure as usual, and a fair value gap. You can see this small fair value gap here. This one is enough for price to actually attract it back to this area. If you can't see it clearly, you can also go to your trading view to check it out. So this was on Friday around 10. This was around 10, and we have a fair value gap price respected at this spot here, and this is giving us a bullish trade. Let's put our entry here. The next thing is use this previous low that created for us that next fair value gap for our entry, and the next one is our take profit. You can use this previous high here, which is giving us a 3.07 risk to reward ratio, or use this previous one here. This is giving us a 5.03 risk to reward ratio for our trade. You can see our price rally all the way to this spot here. So just leave that. That was our trade number, if I'm not mistaken, that was our trade number 17. So this was our trade number 16, and this is our trade number 17. The next should be our trade number 18. So moving on, we have a bearish trade here. You see our price tapped into this fair value gap here, rallied to the downside and created for us a break of market structure. You can see at this number 18 here, you can see break of that previous low and a fair value gap here that's been highlighted here. So this is how we enter our trade for our bearish position. We'll put our stop loss right above that high that created that fair value gap, and our entry is just at that fair value gap. The next thing in line is our take profits. Now you can see take profits can be our previous low. Now using this one won't give us a very good risk to reward ratio. As you can see, this might give us a 1.59 or 56 risk to reward ratio, and then this one would give us a higher risk to reward ratio, giving us 6.38 RR, if not more. So the next one would be our trade number 19. Do we have a trade number 19 here? Okay, we do not have a trade number 19, but this actually looks like a trade number 19 here. We have a tap into this fair value gap here, and the next thing is a break of market structure. You can see a break of market structure and a fair value gap here. This would be our entry, and yeah, we have a short position just like so. Wow, so we have a trade number 19, and this would be our stop loss, but this is quite high because the take profit is not that high. So You can use this as your TP. You can use this one as your TP, but price did not come through to that end because of this fair value gap. So either ways, it's giving us a 2.91 risk to reward ratio, but we have hit our stop loss. And if you had stopped here at this fair value gap here, because once price hit a fair value gap, it's very likely that it will hit the stop loss back. So this would have given you a 1.92 risk to reward ratio, and that was it. So I guess that was our trade number 19. So moving on, we can see a big fair value gap here. Price is trying to respect any fair value gap at this spot, so this is giving a bullish trade on Monday. But let's leave that. Anything can happen before then, but let's just try to find more fair value gap and try to anticipate, patiently waiting for a tap into that fair value gap and a break of market structure. Then use your next fair value gap that you can see as your entry. That's just it. So guys, let's meet on our next episode on the trades we missed last week. Peace.